So back in 2008, the bad news was real estate market was crashing. The good news was the Fed was dropping interest rates. So it was like hog's heaven. I mean, we creamed it, right?
It'll happen again too.
Okay, so this time is 2023. Real estate is crashing from a bubble. Again, 2008 was a bubble. But instead of dropping interest rates, the Fed keeps raising interest rates. So if you haven't fixed your interest rate, you're in serious trouble, right?
Without a doubt. With Robert, you think about this. The Fed or the inflation rate was 9.1 in June. So now it's 7.1. So they've raised rates 6 times and it's gone down 2%. Now there is a lag effect, of course, but it hasn't really moved much. 2%, and they've jacked rates. And so what's happened is, all the real estate is being repriced right now, and it will be repriced next year. And there's no way that the Fed's going to be under, let's say, 4 on inflation by the end of next year. In my opinion, there's no way.
Yeah. And so, the Rich Dad Radio Show, the tagline is always the good news and bad news about money. And personally, hate to be pessimistic, but this is one of the worst things I've ever seen. Do you know what I mean? Even I wrote that book with Ted Siddell, Who Stole My Pension? And if you pay any attention, what happened in England is when they screwed around there, the first thing that popped up, their pensions were broke. And what Americans are going to find out, their pensions are looted. There's nothing in them. So this is almost a perfect storm, because it's my generation, the boomer generation, their biggest asset, they say, is their house. And in Rich Dad Poor Dad, say your house is not an asset. And on top of that, they're planning a retirement, so their 401k is crashing, or the IRA is crashing. And if you have a police pension or a teachers union pension, it's been looted. I mean, I hate to be so pessimistic, but I've never, Kenny and I have talked about this for years. The perfect storm is coming, and I think it's 2023. What can a person do? In my opinion, is going to be the worst economy any of our generation has ever seen. That's my opinion, and I hope I'm wrong. When we saw 2008 and subprime coming over, I remember I had an assistant, and she ran, this is prior to 2008, she ran down to one of the worst neighborhoods in town, and she bought a house that she couldn't afford because her thoughts were real estate always goes up in value. And she and I got into a fist fight almost, because she was so sure that house was going to make her rich. And thank God, I got through to her. She didn't buy it, because right after that, the 2008 market crashed. And so let me reiterate again, the good news for Kenny and I, when we saw that, real estate prices were coming down, but interest rates were coming down. Today, interest rates are really high. I mean, real estate prices are really high, but interest rates are going up because they're trying to stop the bubble. The problem is, in a boom market, you think you're smart. Everybody thinks they are. But when the market crashes, kind of the good news is, I think people come to their senses. They smell the coffee, and they're more willing to negotiate. Is basically what you're saying?
Yeah, and it depends. I laugh because there's still these young guys, 10 years of, guys of, if you're in your mid 30s, you're in trouble. Like I'm telling you, because you're not going to listen to guys like us. And so, you're just going to raise that next fund, buy that next deal. Your head is down and you think tomorrow's going to be better than last. And I'm telling you, we're all, there's no way with interest rates now in the 6s and 7s that, you projected that a year ago. There's no flipping way. Your interest rates are higher. Your labor costs are higher. Any renovation or construction costs are higher. Those are facts. There's no way that you beat the market in those 3 things. So, and I just laugh because I see they're putting new funds out and they're raising more money and they're doing all this stuff. And people are, you can believe whatever, you can put whatever you want on a business plan and raise money. As we know, Robert, that can happen.
Yeah. When I was a kid, they said, don't trust anybody over 30. Now that I'm 75, I don't trust anybody under 30.
Yeah.
Because, they were raising the economy of buy the dip, the Fed's got your back, just keep buy, hold, pray, and all that stuff. And I see these younger guys on YouTube and all this, and we know a lot of them. They're just saying, don't worry, the market will bounce back, buy the dips and all this. And the reason, let me give it again, this economy is different. Again, interest rates are going up this time. Prices are coming down, but unemployment is going up. And the key is always unemployment. Or as we say, if your neighbor loses their job, it's a recession. If you lose your job, it's a depression. And so that's why I would, if you're in trouble, I would hire an attorney to guide you out of the mess. Don't ruin your future by defaulting or all the other stuff. But there's going to be a lot more opportunity. So what else would you say to be a person, any person, young or old, depending on the situation? Are they caught with their pants down, or are you just getting started? What are the opportunities?
I think if this is a 9-inning game, Robert, we're in the second or third inning. I really believe that. Next year we'll be in 5 or 6. I still think we're going to have high inflation through the end of next year. I think the Fed's going to raise rates all year, not as aggressive, quarter point, half a point. And, we've been here before. In 2007, the federal funds rate was 5.25. Right now it's 4.25. So, you know what I mean? And that's right before the last crash. So you can see the federal funds rate got raised right before that. I was investing during that time, Ross and I, but the key was you can still buy today, by the way. It just needs a cash flow, period. So if you can pay 7% on something and you have cash flow, and then knock yourself out. The issue is people are banking on it being worth more, and they're exiting without the fundamentals, that you guys teach in your cash flow game. It all boils right down to that.
So anyway, again, there's good news and bad news about money. Kenny has 3 books. If you're going to get into this market, I would say you have to be a lot smarter, because from 2008 to 2022, you could be an idiot and make money. But this time, everything has changed. Our debt is this high. Our interest rates are going this way. And the social unrest or social problems will increase. Today, you can still do well in real estate, but you have to be a lot smarter than 2008.